What's up, guys? We're gonna go through a portfolio update today. I also want to talk about an option I did, and also talk a little bit about margin. And I'll explain that little yellow warning triangle next to that buying power in a second. But first, let's look at overall how the portfolio is doing. We're a little over 20,000. Slightly down today. Past week, slightly up. Slightly up past month. Past 3 months, up almost 12%. Awesome. But since the start of 2025, we're up 3.75%. So that's not bad. Not terrible. All right, let's talk about an option I just did. All right, so the underlying stock here is YMAG. You can see I did try to put in an order for the $15 strike price for 7/18. Today's 7/18, July 18th, 2025. No one was biting. I had it at price to sell at 10 cents. No one was biting. I put it down to 5 cents. No one was biting. So I did something different, and I ended up selling it for next month with an expiration date of 8/15, and I sold it in the money. So let's look at this option chain, and you can better see what's going on. Okay, so first, YMAG. Right now it's at $15.38. It's been trading around that for the past week. Pretty flat. It's actually rising. So you see what kind of trend it's doing right now. Let's look at the options. Let's click on trade options. Okay, and this little warning pops up asking if you want to trade on expiration date. So today is 7/18, and it's asking, do you really want to trade on this date? Because it expires today. And it says if you enable trading on expiration, you'll be able to open new option positions until 3:30 p.m. Eastern Time on the expiration date. Please note, if your position is closed during our sellout process, it will count as a day trade. So I always click dismiss. I don't want to enable trading on expiration because I might forget about this, and then all of a sudden some positions may move against me, and then it counts as a day trade, and then it might max out the number of day trades I'm allowed before Robinhood marks me as a pattern day trader. So I don't want that. I don't want to forget about that. I'll just click dismiss. I'm not going to do that. Everything's grayed out. I don't want to trade anything for this day. So what I did is I went out to August 15th, about a month away. You can see in the middle here, share price is $15.37. If it was out of the money, I could have went for the $15 put and try to sell that. But the in the money, you can see that you can get a lot more money for that. Reason being is that chance of profit's a lot lower, and the risk is higher that you'll get assigned on this option and be forced to buy 100 shares of this. But this is what I did. I went to the $16 put, and I said, yes, I would like to sell this. And I think I did one option at 90 cents. And you can click on this little down arrow, and that green region means that you made a profit, because even though there's a chance that before 8:15 I'll be forced to buy 100 shares of YMAG for $16. So that would be 100 times $16 is buying it for $1,600. But at the same time, going into this deal, I did receive 90 cents times 100 bucks. I mean, times 100 shares. So that's $90. I did receive $90 credit. So that's why you have a little bit of buffer in case this underlying price drops. So if it's at expiration for $15.10, I break even. And if it keeps plummeting, then I would have experienced a loss, and it would have been better just to buy the stock outright instead of messing with these options. But so that's why we have that little buffer there from receiving $9 to get into this option. So that's what I did. I bought one option, I sold one YMAG at the $16 strike price for the 8:15 expiration, and I received $90 for entering that option contract. So if the price of the stock ever reaches below $16, which it is right now, I could be assigned and be forced to buy 100 shares of YMAG. That's okay, because I do want to get into YMAG, and so that's why I did it in the money. So then my chance of getting into this stock is higher than what I've been doing before, which was selling stuff out of the money. So I just wanted to try that. It's riskier, but I did receive $90 up front to enter into that contract. So I'm fine with that. So after I did that, my buying power went down, and that little warning triangle popped up. So if I click on that, you can see we have cash at around 12 grand, margin total, which is like borrowing power, options collateral, a bunch tied up in that. Margin status, this is what it's warning us. High risk. Your portfolio is only $750.72 above your maintenance, so the risk of a margin call is high. So it's almost 4% above my maintenance. Explore your margin. All right, so there's a little helpful chart here. It's warning me I'm nearing a margin call. So if I, for some reason, lose out on some options deals, or everything moves against me above like $750 worth, Robinhood could do a margin call to protect those positions, to buy or sell options or stocks or whatever at their discretion. They get to choose whatever they want, and they can sell off money or sell off stocks to make money to cover any kind of debt I go into past that buffer. So they can close whatever positions they want. They'll do it automatically, and there's nothing you can do about it. So it says I'm nearing a margin call. I would have to deposit $550, or closing some positions can help improve my margin buffer. And it will tell you what positions you have, what kind of maintenance ratio there is, maintenance required in dollars. But so far, since I have Robinhood Gold, I get $1,000 interest free in margin. And so far, even though I'm using margin, I have never been charged interest on it yet, which is pretty neat. So yeah, this high risk margin status, I'm not too worried about it, because if you look at my options, a lot of money is tied up in these options. Most of them expire today, and you can see that a lot of them are valued at a penny, so pretty much worthless. I'm not worried about this. They'll expire worthless, and things will be settled on Monday. And then what I'm going to do is I'm going to turn around and sell some more puts on these same stocks. And I'll receive a little bit of money for doing that for these. I'll be a little safe. I'll do, instead of in the money, I'll do out of the money, selling put options on those. And yeah, on Monday, that margin call high risk will probably go away because all that money will be freed up, because it's not being tied up saying that I'm going to be putting in these orders to buy these puts. So yeah, the buying power will increase. I'll put in some sell puts for some more options to kind of repeat this process and receive a little bit of premium income for doing so. So that's what that little symbol means. And yeah, and then on next week, we'll see how that all plays out. And we'll also see if I'll get called on the YMAG. Let's see how long that takes for them to force me to buy those shares. Whenever I was trying to do it at the $15 strike price, no one was biting. When I did it at the $16 strike price in the money, it executed right away. So yeah, thanks for watching. If you found this video helpful, you can like it and consider subscribing. Thanks. Bye.